Hello, Joe here from ZB. Welcome to the latest Bitcoin market analysis, the first full analysis of 2022. It's been a very interesting week. So what I'll do in this report is run you through some of the key things that we've observed over the last week. We noticed that at the beginning of 2022, the Bitcoin price was dragged down to a certain degree. We can certainly see the Federal Reserve. We can certainly see that the Federal Reserve's liquidity tightening has helped drag that down. However, we've also noticed as well that in some stock markets in America, they've reached new highs outside of the crypto industry. So it shows that one of the reasons for this correction may come more from crypto itself and some sort of general skepticism towards the decision and just not the buffer that we can see in other markets to protect itself from that. In previous weekly reports, we've repeatedly emphasised that the fundamentals of Bitcoin have not deteriorated. We've always focused our attentions on the derivatives market. Due to the high contract position holdings and the long-short ratio, the funding rate has not significantly turned into a minus. In this decline, however, due to this heavier sentiment of the contract position longs, it has become an important reason to suppress the Bitcoin price. The fundamentals of the spot market are still showing a healthy trend. ZB Exchange has continued the trend of net withdrawals as a whole. This is something that we've been seeing over the last few weeks. The illiquid supply has reached a record high of 14.4 million, keeps breaking records. The difference between the long-term holders' supply and the short-term holders' holdings has reached the highest in history at 9.6 million. The imbalance between supply and demand in the spot market is still continuing. Considering that there are still huge holding orders in the Bitcoin contract market, and the leverage ratio of exchange contracts remains high, there will still be large fluctuation risks in the short term, and these need to be paid close attention to. Looking back at the fundamentals, the current dynamic flow structure of the imbalance between supply and demand of chips in the entire market has not changed due to the recent market decline, especially the core indicators such as the liquid supply and long-term holder supply. The fundamentals still show a positive trend, indicating that the current market is showing signs of being oversold, and we should not be overly pessimistic about the coming quarter. So, market sentiment reflected in the Fear and Greed Index, the FGI, fell to 10 this weekend, and the overall market sentiment was extreme panic. From historical experience, when market sentiment falls below 20, it's usually in the stage of preparing to reverse the market. Considering that there are still huge holding orders in the Bitcoin contract market and the leverage ratio of exchange contracts remains high, there will still be large fluctuation risks in the short term. As we said before, we need to be careful about that. Looking ahead to next week, from a technical point of view of the K-line, the strong support of Bitcoin in a period of time is 40,000. At present, there's a faint upward trend. The daily line of Bitcoin has deviated from the bottom, so it's possible to maintain confidence in the market outlook for the time being. Now, as we always say, this is just our observations. It's not trading advice. You've got to remember that trading can be risky, especially in the volatile situation that we see with Bitcoin at the moment. While it, of course, holds great potential in the long run, it can also carry significant losses in the short term. Bear this in mind. Crypto markets can, by nature, be volatile, so please take care when you're trading.